If we close below 7800, temporary pressure, but otherwise overall I think it's a consolidation in a bigger up move.
Okay. Dilip, what's your call in terms of the kind of pressure that we've started to see on the markets? Do you feel that this is a consolidation? Do you feel perhaps we'll see a further correction in the interim? What's your call at the moment?
Well, I think after a really an uninterrupted run, I think we are seeing some time-wise and sideways consolidation at the moment. And one thing also is becoming a little more apparent, which was also very obvious all these years, that without the FII support and the tailwind to the markets, I think markets are finding it difficult to really scale the higher levels at the moment. So that remains at the background. But having said that, I think the major macroeconomic concerns that were really a main problems or the apprehensions for any foreign investors, those seems to be gradually diluting in a big way, whether it was oil, whether it was current account deficit, whether it was gold which was causing so much of problem, and consequently everybody is looking at inflation numbers and interest rates both to head downwards. So I think all those concerns are being taken care of. So in a way that provides a good solid support to the market on the downside, and one therefore should not expect any reasonably big correction unless and until internationally you have some major event happening. That's a different ballgame altogether. But otherwise, I would look at it more something like that we are in a broader channel which is going to be upwards for next couple of years. And within that channel, you'll find that there's going to be some kind of correction downwards within the channel, and that is how I look at it. So in short, I don't expect any serious correction to happen, but it always remains a market to buy on the dips.
Okay, fair enough. Let's take a look at what's happening today. We've got earnings coming up later this week, and Heyman, IT is taking a knock on that Citi downgrade. Infy, Tech Mahindra, if we pull those up for you, 4% cut coming in there. IT, how's it looking to you?
Overdue correction, but I don't think it's going to go down too much from here because they are in long-term uptrend, especially Infosys you mentioned, Abha. We've just recently posted a fresh all-time high, and if you look at TCS and Tech Mahindra, they've defied the laws of gravity, gone up one way. So even if they were to decline a little bit more from here, I mean, what's the big deal? But it just seems more like a correction. I'm not sure this is a trend reversal as yet. I don't think so.
Dilip, your call on IT at the moment. Infy almost down 5% on that downgrade today.
Sure. I think as far as the IT sector is concerned, on a relative basis, if one were to see, the sector is still relatively cheap as compared to some of the other sectors which have really gone up quite a bit, more on anticipation than on reality. So in that sense, you have an IT sector, the front lines are still showing about 18-20% bottom line growth. They are still generating ROEs in excess of 25%. They are still generating good amount of free cash. So I think despite the run-up in the IT and some small correction, on a downside, I don't think that there is going to be any serious correction. And I think there will be an opportunity for people to buy, and there will be a lot of buying that will happen if it corrects further. And I think this sector still remains pretty good and pretty interesting. Anybody who wants to acquire the stocks even for 2 or 3 years, or even if they want to provide some kind of resilience to the portfolio.
Okay. Heyman, how's an IDFC looking to you? It's finally moving today. We haven't seen it move in a while. It's up about 3% in today's trade. What's the kind of target you have on an IDFC?
Currently, I think 154 is going to be slightly difficult to take out, Abha. Like you said, it hasn't done anything much for quite some time. As of now, it seems more like a short-term bounce. If it sustains above 154, in fact gives a weekly close, I think then one can look at it seriously enough to warrant a target of around 166, Abha. But till we don't take out 154, it doesn't look particularly fetching, so to say. It's
okay.
It seems like a bounce.
Okay. In terms of the news on government's ETF that's being planned, Access, L&T, these are some of the stocks that they're planning to look at. Are you at all excited about the ETF? Do you think this is a good way for them to go?
I think so. I think that will minimize the impact on the stock prices basically. I think looking at how the Goldman Sachs PSU ETF did reasonably well. I think this seems okay, and most of the stocks, whether you look at Axis and L&D, both have corrected significantly. So, but yes, I think it seems like a decent way. At least it should minimize the impact on the stock prices.
Okay. NTPC is the other one on the move today, which is, which in fact we've been seeing some buying in the power stocks the last couple of days. Dilip, have you given up on the power space, or do you still think it's a buy on dips?
Well, I think as far as if one were to generalize, maybe I think there's a lot of waiting yet to be done in the power sector. But if you were to be a little more stock specific, say like an NTPC or a Tata Power, I think maybe Adani Power also, I think some of these names probably will still give a reasonably good returns. I think particularly the likes of NTPC, which is sitting on a good amount of cash and which probably is in a process of acquiring some the almost ready-made power assets which are slightly stretched out. So I think that will really add value and to the bottom line, and also make a better use of the cash that they have on the books. So I think I would still look at on a selective basis something like NTPC for sure.
Okay, so NTPC is a buy coming in there. Would you agree, Hemant?
Yes, I think, like you said, power hasn't done anything much, but yes, I think NTPC is consolidating over here. I think it is the downward momentum has stopped. Power grid looks relatively stronger than the other power stocks, Abha, but yes, I think power grid and NTPC look reasonably okay. Power grid looks slightly better though.
Okay, let's talk about the oil and gas majors as well. BPCL even has been consistently on the move. Even the mid-cap pack IOC HP moving, but BPCL, we've got support coming in from the heavyweights ONGC RIL today, but a 4% on BPCL.
Abha, BPCL has been the strongest of this entire pack because it has been consistently been posting higher tops and bottoms. I don't think any other stock is comparable to it from that point of view. Currently, we saw a cooler from 720 to almost 600 Abha. So we are bouncing back again. It's given a mini breakout of sorts. The bigger picture still seems fine, but I have a feeling. Maybe the smaller ones like IOC could do slightly better in terms of percentage by return vis-a-vis a BPCL.
What's your take, Dilip, in terms of the OMCs?
Well, I think the things are looking increasingly better for them without any doubt. I think the oil prices at near $90 is absolutely a music for them, and I think the way the diesel prices have been increased, so the under recoveries are now confined only to maybe the kerosene and LPG. So that also probably, which is not a very significant burden. So all in all, I think for the OMCs, what is going to be more important is that they'll have a better cash flows, they'll have a better earnings, they'll have a better visibility, and not the dependence on the government for the under recoveries, which was the case in the last couple of years. So I think that sets the tone for expansion of P as well as better performance over next couple of years.
Okay. That's the call when it comes to some of those OMC counters. We've got a target coming in on an SBI from a CLSA of about 3,600. That's interesting as well, Hemant, because PSU banks still have a lot of those asset quality concerns. SBI, according to you, is it a buy at this point?
Contra buy, yes, not much to lose. Having said that, we're still in a correction, intermediate downtrend, the way you would put it, but yes. SBI and PNB and maybe BOB to some extent Abha have been relatively stronger than the rest of the PSU bank pack because the rest have been completely slaughtered. So yes, I think maybe not at one go, maybe you can stagger your purchases. Yeah. But yeah, SBI seems like a decent enough stock, especially on declines.
What's your call on the banking pack, Dilip, at this point? Would you stick to private sector banks? Are you looking at the PSUs given the kind of beating they've had, and particularly as we look to the economy to pick up, what would you be investing in when it comes to the banking space?
So in the near term, if you're talking about that, we are just getting into a result season. So I think the private sector will still continue to show much better performance on all the major parameters, whether it's going to be NII growth or whether it's going to be the asset quality or whether it's going to be ROEs or ROAs for the banks. So in the near term, I think the private sector banks will continue to be in the limelight and will do better. But there is no doubt that in the slightly longer term, as we all bank on the fact that the economic recovery has to happen, and that will get mirrored in the improving quality of the assets or the public sector PSU banks. So in that sense, I think the PSU banks possibly post results will be much better placed in terms of getting into them in terms of the investments. So I think that is how I would play in the near term. Yes, the private sector banks, for example, Axis, ICICI, or even IndusInd or Federal Bank, and maybe in the longer term, SBI, BOB, and maybe even Bank of India and Union Bank.
All right, some banking picks coming in there. Let's take a look at the mid caps, also flat with a marginal downtick coming in on the mid cap index as well. Heyman, I'm just going to go ahead and ask you your picks because there's plenty that's buzzing about today. A Crompton can be highlighted. A Jet Airways has bounced back. Apollo Tyres is still up 3%, as is a Cox & Kings. Any of these on your radar, or else what else is looking good to you?
Cox & Kings has been under a fundamental coverage for some time now. We've recommended a buy at around 245. We remain bullish on the stock. Apollo Tyres looks interesting. Very few stocks which are looking exciting from a near-term point of view. If you take a slightly longer-term point of view, yes, I can give you a bigger list starting from L&T, Biocon. But near-term point of view, not too many stocks to go by because the market's still range-bound. I think the Bank Nifty is looking slightly stronger than the Nifty today. So if you have a slightly high-risk point of view, I think something like a ICICI Bank or a PSU Bank for a few days can be considered.
All right. Dilip, from the broader markets and mid caps, what's looking attractive?
I think in the mid cap space, there are quite a few things. One is Cox & Kings, which I certainly agree with him. I think that's a stock which can really do wonders as they're selling off some of the assets and monetizing them and trying to reduce the debt, which has been a concern. And as EBITDA to debt really improves, I think that's a stock which can still go places. So I think Cox & Kings remains a good pick. Slightly on a broader basis, we like PI Industries, we like quite a bit. I think that's another a sustainable growth story in the making. We like Voltas also. I think maybe it has moved up quite a bit in the short run, so there could be some correction. But notwithstanding that, I think Voltas also looks pretty interesting, slightly from the longer term perspective. So I think a couple of these stocks, possibly another name which just crops to my mind right now is Orient Paper. I think that's a good long-term bet, maybe over 1.5 years, around 30 rupees. But the asset quality of that company is pretty good and much more than the market cap of the company. So I think that's a stock which possibly can be had in the portfolio for a long term.
You know, I just want to take Cox & Kings a little further because it's something that's on both your radars, but it's already moved up quite a bit. So give me a target, Heyman, or a time frame that you're looking at, even if we say that it has all these fundamental reasons for of course, growing exponentially. What is a kind of outlook that you have?
Firstly, entry around 260 or so, because I think we walked into an intermediate correction. Post that, I think from a 6 to 7 month, 8 month point of view, I have a target of around 370 or so. All
right, so 50 rupee up. What about you, Dilip, in terms of a target on Cox & Kings?
So I think over a longer term, I would think that around 400 should be the rate. And our broader calculation is in the enterprise value, as the debt keeps on coming down, it will be compensated by the market cap, enterprise value remaining the same. So I think that will really help the company going for a good re-rating. So in that sense, I think 400 looks very much possible on the cards.
All right, gentlemen, we'll leave it there this afternoon. Thank you so much for joining us. Pleasure as always.
Always a pleasure.
Agam, just about a minute and a half to go. How's it looking on the heat map?
We were poised to see the markets quite identical to yesterday, but we have seen a little bit of recovery since in the last about half an hour. What's really happened is that we have seen weakness. There's no doubt of that. Now, there's no doubt about that because markets have, as a matter of fact, declined. However, we are seeing very mixed moves.